Intel just delivered the strongest quarterly revenue growth in 15 years, doubled earnings estimates, and saw AI revenue jump 70%. The stock dropped nearly 8% anyways. We ran the 1-month hourly FSR chart. Here's what the data structure shows. The Q2 numbers were staggering. Intel posted $16.13 billion in revenue against a $14.3 billion estimate, with adjusted EPS landing at 42 cents versus 21 cents expected. Data center and AI revenue surged 59% to $6.3 billion. So why the sell-off? CEO Lip-Bu Tan warned that AI supply constraints will persist. Intel Foundry still lost $2.1 billion in the quarter, and management raised 2026 CapEx to over $20 billion. Wall Street loved the demand, but got spooked by the cost to build it. Looking at the 1-month macro chart, Intel scores of FSR of 78.9%. Notice the degradation in chart structure. Intel was trading above $140 early in the month before stepping down below its 112 average line. On the 7-period rolling window below, the average sits at almost 96%. Look at the window 45 to 48. That's where rolling FSR collapsed down to 89% as price broke down from 122 to 110. The rolling model caught the structural regime shift long before the post-earnings sell-off to $92. This is a classic demand beat capital expenditure miss setup. Alphabet dropped on negative cash flow, and now Intel drops on a $20 billion CapEx expansion and Foundry losses. The market is demanding near-term margins over long-term infrastructure spending. Full audit model and interactive calculator available at predictability-api.com. Link is in the description. Thanks for stopping by. We'll catch you in the next one.